Welcome back to Data Driven Finance, brought to you by InvestNet Yodlee. I'm Mike Stiles, and my guest today is quite the entrepreneur, innovator, and speaker in the fintech space, especially where data is concerned. It's David Snitkof, who's current Senior Vice President of Growth at Ocrolus. And we'll get into exactly what Ocrolus does because it will matter to you if you're a lender or if you've ever applied for a loan. David, thanks for being with us today.
Thank you, Mike. Great to be here and looking forward to the conversation.
Yeah, me as well. Now, your career path has taken you from a lot of companies like American Express, Citi, Cabbage, and now what you're doing at Ocrolus. Where did all that start? When did you develop a keen interest in data and analytics? And then what made finance that specific area that kind of became your passion?
Well, I've always been a builder, and I've just enjoyed building things, whether that is building software or furniture or companies or families or teams or anything like that. And when I was 8 years old, I was in my school library. I found a book called Making Your Own Computer Games and Programming Them. And I got really into that. And that was super fun to me. And so I've always been building something. And then when you think about personal finance, business finance, and credit, what I like to tell everyone, and I tell this to everyone who joins Ocrolus as part of their orientation, credit is the process by which a modern capitalist society makes plans for the future. It's the way that people and businesses and governments make a commitment today, not based on how much cash they have right now, but based on a shared optimism for what promises they can fulfill in the future. And this is true if you're a person or family getting a mortgage, if you're a business getting a line of credit to finance working capital, if you're a municipality doing a bond offering. Credit is just incredibly important in our world. And the ability to have a credit system that is fair, efficient, and active, and in fact large, is something that directly affects the amount of economic opportunity and growth in the world. And additionally, for me, I think it's an area where it's very much affected by data and technology and customer experience. So there's kind of endless depth for someone like me to dive into.
Yeah, well, like you said, a lot of what you've done is building systems and building teams from the ground up. For those who are trying to do that as well, who might be listening, be that starting their own thing or even try to build something inside of a company that they work for, what are the ingredients for success?
Well, curiosity is very important. And I think even more than that, the one word that comes to mind for me when you ask that question is agency. So if you're an entrepreneur, you're naturally a high agency person. You're someone who looks at the world and says, there's not a thing needs to exist. Let me go figure out how to make it. And how can I just be really resourceful and make that thing? And, we all want to be high agency people. I think every one of us could become higher agency. And I think, everyone wants to hire high agency people, to work with high agency people, to partner with high agency people, as well as high agency companies. And so that's fairly obvious if you're an entrepreneur. I think even within a company, everyone who wants to get things done can have even higher agency. And to say, if you're looking around wondering whose job it is to solve a problem, well, just look in the mirror. If you're wondering who has the power to say yes to something, sometimes you just need to look in the mirror. And I think that a lot of people, especially within larger companies, put up barriers, and some of those barriers are organizationally imposed, but many of them are self-imposed and within our own minds. And so whether those are barriers between different departments in a corporation or people of different titles or levels or anything like that, I think what high agency people do is look around and say, you know what, I'm going to get something done. I'm going to be resourceful. I'm going to figure out a way. And I'm just not going to pay attention to those barriers. And generally, people who do that find themselves being pretty successful.
Yeah, interestingly, we all work to get our credit scores up and to become financially creditworthy. But, you use that word agency. That's almost like a form of personal credit, like building credibility inside the organization to give yourself a better shot at building something successful for your company.
Yeah, absolutely. I think that there's just so much that you can do, whether you've been in business for 20 years or more, or whether you're straight out of school going into your first job. I think just being someone who takes a problem and commits to solving it and takes ownership of it, I'd give that advice to any young person of just that really helps you stand out and helps you learn. And with that, as I said before, curiosity, whatever you learned in college is going to become out of date in a few years. The world is changing very quickly. The world of technology, the world of regulation, the world of really everything that we do in our society. And so, it's just really important to always continue to learn. The older you get, the more you realize how little you know. And it's just really important to always be learning.
Well, talk to me a little bit about the lending space. I mean, you co-founded Orchard, and even before that was acquired by Cabbage, it kind of started solidifying the ability to do online lending, which, as you mentioned, was probably a natural evolution. It was always going to go that way at some point. Was online lending an easy and natural evolution or a bumpy revolution?
Definitely bumpy, and we could talk about that for a long time. But, we started, I and my co-founders started Orchard in 2013, and we were a data analytics and trading company in what was then called the peer-to-peer lending space. And we started it because we were fascinated by this idea of peer-to-peer lending. And we saw all kinds of really interesting companies like Lending Club and Prosper starting to grow pretty quickly. And we thought, this is the future, and we need to build real analytical tools, real risk management systems, real trading platforms for that market. And look, I remember going to a dinner in about 2013, and everyone had to write on their name tag, in the future, this market, and because people were deciding whether to call it peer-to-peer lending, marketplace lending, online lending, digital lending, whatever. And you'd say, okay, what's it going to be called in 10 years? And I said, well, it's just going to be called lending, because it's just natural and intuitive that it would be done online, just like every other part of our lives. Now, I have almost been surprised by some parts of the lending world not evolving as quickly as I would have thought. So did peer-to-peer lending become a $1 trillion market the way many people thought? No, it absolutely didn't. Did so-called alternative data beat out the credit bureaus and put the credit bureaus out of business? No, absolutely not. I think the credit bureaus are incredibly important and good businesses, and they're augmented by other data sources, but they're not replaced. Are big banks dying? No, of course they're not dying. In fact, the biggest banks are stronger than ever. And almost every fintech company is working with a lot of banks to serve their customers. And so there have been so many surprises and ups and downs in the transformation of online lending over the years. And I think we're now just, really starting to see some product use cases in lending that couldn't happen without the internet. But generally, for the past decade or so, it's been more or less traditional lending products just moving online and happening in a more efficient and customer-centric way.
Right. So your world right now is helping lenders and those financial institutions you were talking about better and more efficiently vet loan applicants and get loans done. So how does Ocrolus do that?
Yeah, and so I've been at Ocrolus for about 4 years. I actually knew Sam, the CEO, and Vic, the COO, for a few years before joining the company. And I always just really admired the two of them and the company that they were building. And, it's so easy for entrepreneurs to get distracted and try to do a zillion things at once. And I really admired Sam and Vic because they built the thing they said they were going to build, and they built, a really strong company, really strong product, great clients, and were growing at a great rate. And so I decided to join them when I had the opportunity in 2020. So Ocrolus is an AI-driven document automation platform that really powers a lot of the digital lending ecosystem. We work with over 500 lenders and financial services companies of all kinds, but mainly small business lenders, mortgage lenders, personal lenders, auto lenders, to help them make high quality decisions with trusted data and unparalleled efficiency. And that generally means automating some sort of document-driven process. So you imagine a person going to apply for a mortgage. they might give their mortgage lender 50 different documents, 100 different documents. And so what Ocrolus does for that mortgage lender is we classify the documents, we extract all the data with incredibly, incredibly high accuracy. We detect fraud on the documents, so we check if they've been tampered with. And then we do an incredible amount of analytics on the resultant data. So in the mortgage world, we automate a lot of the income calculation. In the small business world, we do really, really deep cash flow analysis to help lenders understand the risk of their applicants. And so Ocrolus is very in this market of helping lenders make better decisions.
So where does all that data come from and how reliable is it?
Well, lenders just rely on an incredible amount of data. And, lending is it's a very difficult business. And so the more you can learn about your applicants, the better. But you always have this tension. So every lender has a tension between getting as much comprehensive data as possible, as well as eliminating friction and having a good customer experience. So if you could somehow get 10 years of bank records from your applicants and every document they've ever had and information from every job they ever had, maybe you would get that. Now, who knows if all that data at the margin would be super valuable, but you might choose to get it. But again, no customer would ever complete your application process. There would be too much friction and you'd go somewhere else. So lenders always have this balance. So in almost every kind of lending process, there's some form of documents, things like bank statements, pay stubs, tax documents, IDs, utility bills. Obviously, in the mortgage world, you have other things like appraisals and insurance and other forms like that. You also have things like bank data, digital bank data. And Envestnet Yodlee, of course, has been a huge leader in providing digitally accessible bank data to lenders in a customer permissioned way so that they can make decisions really understanding the inflows and outflows of a person or business's bank account.
The paranoid human in me might say, hold on, can the lending process get so automated that I'm only as good as my numbers and there's not another human making a judgment call on me?
Well, that sounds great to me. The thing is, the human mind is the ultimate black box. And in fact, it's very hard to look at a human, even if a human tells you what he believes to be honestly true, how that person is making a decision. And so sometimes people talk about the old days of banking and, where there was a branch in your town and you walked in there and the loan officers knew you and you had a relationship with them and they supposedly cared about you and all these things. And I would actually venture to say that recollection of the past existed in movies and not in reality. And if in fact it did exist in reality, it was in the reality of very, very few people. Because if you didn't have that relationship, if you didn't have that local bank, if you didn't look like someone who fit someone's stereotype of a responsible credit risk, then you might be out of luck and you might not have any other options because the switching costs were so high and because the internet was not there to help you search for other options. So I think the good old days almost didn't exist. And so ideally in a lending process, if you have an efficient process, an automated process, something that is fairly deterministic and rules driven, then you're using data to make a decision. And it's way, way, way more objective. It's way more measurable. And ultimately, it puts a lot more power in the hands of the borrower, in the hands of the consumer or the business, because if they don't get the answer that they like from one lending institution, hopefully they were able to give that answer to them pretty quickly because of the automation. And then because of the low switching costs, because of the accessibility of other things in the market, because there are thousands of lending institutions in the United States, they can go somewhere else, they can try again. And ultimately, customers want to work with the provider who gives them the right product on the right terms in a pretty efficient way with a really great customer experience.
Give me a feel for the scale of risk that the lending institutions have. Like if they don't have good, reliable data and have systems set up to make it usable, what kind of bad things can happen for them?
Well, I was really fortunate to get my first job in the lending world at American Express, a good friend of mine, Russell, introduced me to that company where he had worked. And what he said to me is, lending just is a risk management business. That's the business. And, I actually do this training for everyone who joins Ocrolus, where I talk to them about the business of lending, the business of risk management, how lenders make decisions and why. And, lending is a business where you have to make incredibly difficult decisions. You have to make high quality decisions. And you're doing it in this environment of uncertainty and asymmetry. And those are two really important factors. When I say uncertainty, what I mean is it's impossible to know at the time of underwriting every piece of information that will be relevant to the performance of that borrower. You could look at everything in the world. You could be the best underwriting company ever. You could be the best underwriter. It's absolutely impossible to know every relevant data point. You could lend money to someone. That person could be someone with a good job, someone who's responsible, someone who has a great history, but unfortunately that person gets sick. It's nobody's fault, but it does happen, and that's uncertainty. And asymmetry is the other aspect. So a lender makes a little bit of money on a good borrower who pays back, and they lose a lot of money on someone who ends up not paying back. And so because of the asymmetry of this decision, it's really important for lenders to make the right decision at the margin. There are the obvious goods, there are the obvious declines, but making the right decision on the margin is incredibly difficult, and that makes or breaks a lender's business. So, every lending business is a little bit different, but also every lending business is more or less the same in the sense of lending income is a function of making money on interest and fees, losing money on credit losses, losing money on fraud losses, spending money on operational expenses, on cost of acquisition, sales and marketing, on the cost of capital. And, ultimately, if you're talking about credit and fraud losses, this is a huge, huge piece of lenders' viability and profitability. So if you're a lender, you kind of live or die by the ability to access high quality, reliable data, to be able to make inferences based on that data and to use it in an efficient and effective and unbiased way to make a high quality decision.
So we've seen an age where everything became about data gathering, but I know you've kept a keen watch on AI and what it can do in terms of helping consume, organize, and make data actionable. Where are we going with that in the lending space? I mean, what's overhyped and what's underhyped about it?
The interesting thing about AI is that I think parts of it are overhyped and underhyped at the same time. We do an interesting thing in our society with new technologies. So very often we just love lending in this country, right? So we like to take anything and turn it into a stream of structured cash flows. So very often when there's any new technology, people look at it and they say, can this thing make loans? Can I use this to make an underwriting decision? And sometimes the answer is yes, sometimes the answer is no. With generative AI, because that's the flavor of AI that a lot of people are experimenting with now, and because it has so many really fascinating and compelling use cases, people are saying, well, can we use this for underwriting? The answer currently is more or less no. And the reason for that is underwriting, certainly in the United States, from both an operational and regulatory perspective, has to be a deterministic process. That means you put in a certain set of inputs, and you're hopefully going to get the same set of outputs every time. It should be fundamentally repeatable and deterministic and fair. And generative AI is by its nature stochastic. So you don't have a definitive answer, you have a probability distribution. And that is what creates so many of the fantastic uses for generative AI, whether it's for content creation or for art or for solving all sorts of problems that the model never saw in its training data. But deterministic and stochastic problems are necessarily different. Now, just because it can't be used to make a decision doesn't mean that it can't be used in lending. And in fact, generative AI solutions can be incredibly useful in lending in certain areas. And I think there's actually many, many areas, but a couple of them include, number one, fraud. So The technology, in a sense, you could say is fundamentally neutral. Some people are going to use this for evil purposes, and some people will use it for good purposes. But I think there's going to be a lot of use of AI tools in fraud detection. And we even do some of this at Ocrolus in detecting fraud on documents. And so using AI to detect fraud, which is, of course, a persistent and growing problem in credit, is really, really important. Another thing that generative models are really good at is taking unstructured data and structuring it so that it can be used in a more traditional machine learning model or in a rules-based deterministic decision framework. And so again, at Ocrolus, we do this with documents, transforming large and complex and semi-structured and unstructured documents into structured data that can be used in lending. And there are many other forms of unstructured information that can be structured with AI models. And then, another category, which I think is a pretty big category, is automation and what I'd call superhumans. So whether we're talking about underwriters, fraud analysts, credit analysts, even customer service agents, the human touch is actually quite important in many processes, and there are always going to be exceptions. But I think what AI-based tools can do is give you superhumans, a person who is now able to operate in, the top 10% of people who do that function, because the AI is feeding them every piece of information they could possibly know, all of the prompting, all of the direction, and it's helping them make decisions. It's helping them serve their customers better. And ultimately, you're going to see superhuman underwriters in a lot of complex lending workflows because they are empowered by AI. And a great example of this is income calculation in mortgage. And we've been doing this at Ocrolus for quite a while. In a mortgage process, if you are, let's just say, a conventional borrower, you have W-2 income, so you get a salary, it's not that difficult for a mortgage lender to calculate your income. However, more and more and more Americans are having multiple jobs, freelance jobs, gig employment, all sorts of different things that make their income pretty hard to calculate. So you could imagine a mortgage application that has two co-borrowers. One has a traditional job, the other is a freelancer, and they also have rental property income and investment income and dividends and all sorts of other things. And now a mortgage lender has to do a pretty complex calculation. It's also very error prone if an individual has to do this. So what we've done at Ocrolus is say, let's take the information from all these different sources that they need to come from, whether that's bank statements, W-2s, 1099s, pay stubs, all kinds of documents, pre-fill all of the income calculation worksheets in a loan origination system, and then put those in front of the mortgage underwriter so they can vet the accuracy of the calculations, change anything they want to calculate, and then use that to make a lending decision. So we're not replacing the underwriter. We're creating and facilitating an AI-empowered underwriter to serve their customer more efficiently, more effectively, more fairly and consistently, and ultimately at a lower cost, which then should accrue to the borrower having better options and lower cost financial products.
Well, as I mentioned, you do write and speak about fintech, credit, financial futurism. Give us a plug for your newsletter.
Yeah, credit and financial markets, as we just talked about, are super important for everyone, for people, businesses, humanity at large. And AI is kind of changing everything and in a really exciting way. When I think about AI and really any technology, it just increases the surface area of problems you can solve. If there are things that we all thought were previously really difficult, previously unsolvable, or even too expensive to work on, now I think it increases the surface area of problems we can solve. So, almost a year ago, maybe a little less than a year ago, I started this newsletter, the FinTech AI Review, fintechAIreview.com, which is really just an exploration of topics at the intersection of financial technology and artificial intelligence, which are two things that I just really enjoy learning about. I enjoy writing about, and it's fun for me to explore. For me, it's a bit of a forcing function to keep myself constantly learning, exploring, talking to people doing interesting things, writing a little bit of code to run my own experiments. So, please go check it out, fintechreview.com. And, I hope to keep putting out good content and getting a lot of good feedback.
Sounds fascinating. And what about Ocrolus? What's the best way for listeners to find out more about that?
Anyone can go to ocrolus.com. That's OCROLUS.com. We work with over 500 financial institutions today to help them automate document-driven processes. And if you are a lender or anyone else in financial services and you're interested in automation, in high-quality decisions, and really in merging document and digital data to create the best risk outcomes and the best customer outcomes, come talk to us. We would love to give you a demo and show you what we have.
Great. Well, David, thanks again for so much for taking the time to be with us. And for you listening, don't forget to subscribe to the show. There is a lot to know about money and data. And if you want to see how aggregated financial data might be of great use in your business, just visit resources.yodlee, that's YODLEE.com/podcasts. And we'll see you next time on Data Driven Finance.